Hey my friends, welcome to this video on a Fibonacci trading tool that is not very often used. So and it's ironic that it's not used because it's actually the most true to Fibonacci. So if you're a Fibonacci purist, then this really is the tool for you. So it's not actually on all charting platforms, which is interesting. So I'm using it on Thinkorswim. It does come native to the Fibonacci Trading Thinkorswim software, and I'm demonstrating it on this to show you how to access it and how to potentially trade it. So here we go. So first of all, Fibonacci. Most people use Fibonacci retracements, and they're good. I think that's a good idea to use them, absolutely. So we've got all kinds of tools here, as you can see, Fibonacci fans, time extensions, time series here, Fibonacci retracements, regression lines, all these kind of things here, but the most commonly used one is your Fibonacci. Ooh, this is a cool one too. Fibonacci, there it is, Fibonacci, nope, there it is, Fibonacci retracements. So basically, and I'm not going to go through this, I've got another video on this if you want to see it. And you just draw it from there to there, something like that. And they work very well. These levels are significant levels to be watching, and I do encourage you to incorporate them into your trading along with other things. Again, got another video on that to check out how to actually use those. But here's the deal. The reason that this is not the purest technique or tool for using Fibonacci is that they are linear lines. So they use Fibonacci ratios, but Fibonacci ratios are actually derived from spirals. So most specifically, the 6.18, the golden mean, that is actually based on, well, you know, the most popular model is the Nautilus model. And it's a spiral. So we see these spirals in nature, we see them in mathematics, architecture, a lot of different things, and, you know, it's got a lot of significance to it. Absolutely. It really is important in mathematics, music, nature, all kinds of things. So the question is, well, does it work in trading? So it does for various reasons, but this is not the purest way to use it. So what's the purest way? All right, let's get this off of here. So the purest way to do it is actually to use Fibonacci spirals. Since this replicates for example, the Nautilus shell type of spiral pattern. So we go over here, Fibonacci spiral, not to be confused, by the way, with Fibonacci arcs. So there are drawing tools out there on a lot of different charting software platforms that do have Fibonacci arcs or circles. They're usually the same thing, can be named one or the other. But that's not what this is. Now, this is the Fibonacci arc that we're going to be using today. All right. Oops, I did not nail it. There we go. So the Fibonacci spiral, what you do is you mark it from as usual, from a low to a high. And, okay, go up to this high up here. And so similar way as you do with Fibonacci retracements, right? But it forms spirals instead. Now, let me show you that this is different than Fibonacci circles or arcs. So if we compare these two, try to get as close to here as I can, you see that's what the circles or the arcs do, right? Totally different pattern. Totally different pattern. So they're not the same because these are circles that are complete circles. The spiral goes out and out and out and out, whereas these don't. They are 360-degree lines. So that's not what we're looking to do here. We are looking to get the spiral, which, if I can change my scaling, you can see better here exactly what it looks like. Let's see, I have to do this extremely. So there you go. See, the circles are never, it doesn't come around and connect. It gets bigger, the spiral, I mean, gets bigger and bigger and bigger and bigger, and that's the difference. So really wanted to point that out because I've had people that I've taught this in the past that thought it was the same thing, and it is not. It is a different tool. So this replicates that Nautilus shell type of pattern that we're all familiar with for Fibonacci. Now, how does this work? So the cool thing is that it incorporates both time and price. And that's what we have on a chart. We've got two axes, time on the bottom, price over here. So as you can see, I just drew it from a major swing low to a major swing high. And what happened? Well, Actually, let me bring my drawing tool up here. Where did it go? There it is. Okay. So the spiral projects out into the future, so it is kind of like extension lines in that way, but as opposed to regular Fibonacci extension lines, which just measure price levels above or price targets, this actually, because it's curved, it measures time and price. And so as you can see, it came in right here, and price action just followed right down there, and that turned into be a high. And then the big high we just put in here again, wow, really nailed that. And then we gap down from there, and the rest is history. So this was a small high. This is where the market put in a small little retracement. This one, major, right? That was huge, huge, big move down. Now, let's be very honest about this. Let's just be very objective. Did it find every swing high and low in the market? Did it find that low? No. Did it find that high? No. You might consider this a swing low. Did it capture that one? No. So it's not going to catch every major high and low in the market. So that's just, that would be unrealistic. Also, it is not something that I would depend on by itself. I would only use this in conjunction with other tools, other techniques. So in my opinion, there's nothing magical about this. But if you want to add it to your trading as another piece of evidence in your trading, test it out, try it, see how it works, see if you like it or not, if it's worthy of space on your chart. Something that's kind of fun to do. Now, the other thing that I will point out while we're on it is if you wanted to capture more swing highs and lows, then you use a smaller scale. And what I mean by that, the smaller scale, is that one of the reasons that this only caught two major swings in the market, well, one major one and one minor one, is because that we drew the low to the high from such a long period of time. So let me show you what I mean by that. This this low here to that high there, that was a long period of time. That covered all the way back from the end of 2018 to May of 2019, so about 5 months. So that means that then the space between the spirals into the future are going to be farther apart. It's only going to give you signals farther apart, and they're going to get farther and farther apart. So if you want to get levels or lines or spirals that come in at shorter or more immediate swing highs and lows, then you need to make the first impulse move that you're measuring to be a shorter one. And then it'll kind of pull those spirals, those arcs in closer and closer and closer, so that you have the potential to catch more swing highs and swing lows. So that's it, just a little extra thing for you to look at there, experiment with it. If you use this already and if you've had good results or bad, let us know in the comments. Be very excited to hear what your experience with it is. Unfortunately, I don't know if it's available or which platforms it's available on except Thinkorswim. So if also you know that it is available on other trading platforms, type that in too. Help each other out here. Let each other know, because we get a lot of questions like that. And I'm not familiar with all the trading platforms, so you can help each other out that way. And if you like the videos that I'm putting out there for free, hey, share good things with good people. Share it with somebody else. And any comments you have, any questions you have, and also, by the way, any topics you have that you'd like me to cover in the future on these free videos, let me know in the comments, and I keep a running list of topics that people post in and request. So you're the ones who actually create the topics here, not me. I'm just responding to your requests. And finally, I do have my rubber band trade still available. This is an absolutely free trade setup. It works immaculately. It is amazing how good this thing is. It just keeps working year after year after year, and I'm still trading it this year. I've got a lot of people who've just taken this trade and they're making money with it without buying any of my courses, and you're welcome to do that too if you'd like. So just go ahead and go to rubberbandtrade.com and sign up there and you get it absolutely free, no charge. The cost is exactly $0. So that's it, my friends. Have a wonderful day and look forward to seeing you again on the next video.